and markets close in about just under 5 hours. So I do not expect any like bearish move into a stop loss, but if it does, then what do you call it? GU is probably going to be bearish for a bit longer before heading up. We'll be looking into buys maybe down here if price doesn't react good and bounce up off this area, because price has been wicking a lot as well, so it's been rejecting the area a lot and been consolidating. So we can tell that it's building low liquidity in this area. So hopefully soon we can get a nice push up through the structure, through the high. And yeah, once we clear out this area, once price breaks this high, then we should be safe to show our stop losses anywhere in this area, like around the middle of the move. But yeah, also got a double bottom as well. Boom, boom, nice double bottom. Caught the wick, nice and tight stop loss. So we can't complain. That's about 10-15 pips for the day. Currently up by 30 pips for the day. Running, well, 40 pips running, yeah. So let's see how this one goes. Yeah, let's see how this one goes. And hopefully it can blow. Trading with Eds. I'm out of here. Till next time. Quickly, guys, let me show you the proper high time frame analysis chart. I showed you the wrong one. From the one that I just showed you, you saw that the zone wasn't quite established on the daily. But this is the zone that I was talking about. This area, price has made contact with it. Nice area of support. Also, this is the outer trend line. But we can get the inner right there. Boom. So, and as you can see, every time price touches the trend line, it usually wicks off it. Like quite hard. For example, here, big wick off, here, big wick off, big wick off, big wick off, big wick off. And usually that is followed by a price breaking the previous highs and doesn't usually return to this point as long as the trend is still healthy and still uptrending. So aiming for 146 in the long term, 148. I already do see them prices hitting. Well, let's see if I have the patience to hold. Yeah, let's see, because this is a big move, bigger than usual. Bigger than usual. If I'm holding for 146, that is a bigger than usual move that I'm holding for. But yeah, I have the patience. But of course, you need to see how price is moving. But yeah, I'll update you. But I'm very confident these highs, boom, 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 will get taken out. Will get taken out. But yeah, catch you when we're in some nice profit, man. Yeah. Yes, guys, hope everyone's well. It's currently 5 p.m. and let me just give you an update on the GBP/USD trade. Also, there's a trade that I just entered as well. So, share the screen. So, cool. This is the first entry, guys. Mad sniper. So, we was in a consolidation for a long time though, because I got in right there, right. So for almost four whole days. Wait, no, that was 4 days. Yeah, for basically 4 days, price was just in this range. Or just in this tight range. Meaning about 6 pips up, 6 pips down. In them kind of situations, liquidity is just building up. So You have to be very patient in the moments. But yeah, price broke out. Price broke out. This M30 is on the H1. H1 is what's looking like. So what we got here, we got a downtrend here. So we know people are going to be selling around this area. So of course, when it came close to the trend line, people sold it here. And price pushed up. So some liquidity got taken out. A new high was made. Now price is pushing down. At the trend line, inside the trend line. So more liquidity is going to get picked up as well. Currently up by 103 pips from the first entry. Placed a second entry right here. This is another chart. So on the H1, it's gaining for break and retest really, but also want to think like the banks as well. So this is our retail support. It's already been violated when price was here. So since that violation has really happened, just gain on the buy on the retest. The stop losses below the manipulation wicks, right there and there. We're up 100 pips, so we're not really stressing. 19 pip SL, 120 pip TP, going for 1 to 6. Nice risk to reward. And yeah, basically just going for the trend continuation because now price is starting to make higher highs and higher lows. So going to an uptrend. But with this one just like a more short-term kind of entry going for 140 because I do expect price to probably retrace around the 140 area. So I'm just trying to catch a quick profit grab as we ride it up. So yeah, we've got that nice retest of this area. So yeah, this is the second trade that I'm placing. The first trade I've been in it since I think last Friday. Been holding it for about 5 days. Up a very lovely amount of pips. So yeah, I'll let you know how this one goes. And yeah, catch you in the next update. Trading reds. Alright, cool. So this is the update on the second entry that I placed. I had to adjust the stop loss slightly down for about 28 pips. I re-entered on the third entry right here. Reason for my re-entry is because price has broken the retail support area. So first I manipulated here, but I thought it will bounce up from here. But it's doing a bit more manipulation before it does push. So it came into the manipulation lines, liquidity lines. So we're going on another buy off that. Stop loss just at this next zone. This can be a seller's target as well. But worst case scenario, price will come down and bounce up from here. Then we'll go up. But with these entries, I'm using smaller lots, so it's not really gonna affect me too much. But the third entry, stop loss is a bit more below. Stop loss is a bit more below the next zone. Down. No. Yeah, stop loss is a bit more below. There's liquidity wicks right here. And right here. So stop loss just below them. I think I'll have it right here. Right there. Just below all the manipulation lines. And then we'll see what happens. Looking at the entry 2 SL, that might get hit. That'll be a 28 pip loss, but we'll see what happens. So 3 entries in with the first one, obviously. That one we're holding. Then we've got the second one. 140 is target. And the third one on 40 is target as well, which is this one. So let's see what happens. It's 2 a.m. right now. I'm gonna go sleep and the what's good, guys. Haven't let me just give you a quick update on what's been happening. I haven't recorded in the last probably a week, probably been 7 days. Reason being was having some difficulty with the recording, but obviously now sorted. Needed a bit more storage, but that's sorted right now. Okay, cool. So let's start with GBP USD. Wait, not this one. So obviously, I had 2 swings on GBP USD, but I ended up closing both of them for 230 pips each. I'll show you the reason why I closed. But because I want 140, let me explain to you guys why I closed. Okay, cool. So in the moment when I was taking the trade, I did see an upside down head and shoulders, but I was kind of being like I wasn't really significant to me at the time. But obviously, as the trade was going, I realized that at 140 there's a very strong resistance, and there's also upside down head and shoulders. So I got out each entry, each of the 2 entries, and closed at 140. Another reason being is because let me open up a chart. I'll open up a clean chart. Not that actually is a clean chart. But yeah, another reason is because since 140 was such a strong resistance, I had to think that price would range a bit before actually having the momentum to push to 140. Because price has just been dropping and dropping and dropping and dropping. So there's been a lot of like sell side liquidity getting pushed into the market. A lot of sales going on. So swinging like GBP, USD is you can catch your 100 to 200 pip swings, but when you're trying to catch those like say 300 plus pip swings, you should look to get in at the bottom of like let's say a range of market and then swing, or get in at the bottom of a false breakout, right? But yeah, actually let me get a clean chart, it'll be easier. Cool. On a nice clean chart. But if you guys can see, even on the weekly, see that 140 is a previous resistance. So gold's price broke through, then it fell underneath it, and then used the 140 area as a resistance. If we look left, we can see price did reject around the 140 area in 2018. So see the market was very overextended. Like if you look, kept on pushing up. So there had to be some kind of correction. That was quite evident on the weekly. And like I said, before you want to swing, kind of want to make sure you get in. Don't like, for example, let's say you see price like let's say you see price. Hold on. Yeah, actually, you see price like this. So what's happening here is price has been downtrending. It's been ranging. So in this range, a lot of liquidity got built up, right? A lot of liquidity got built up. A lot of highs got formed. So at the moment, price is just accumulating to take out these highs. So when you want to swing it, you want to make sure that you're getting in after all the liquidity has built up. So right now, all the liquidity has built up, and you're getting at the end of it, at the bottom of it. So with this option, there's been a lot of false breakouts followed by highs getting taken out. So let me show you an example. Let's go left. So for example, right here. So what happened here is this would be a resistance, a support area that a lot of retail traders would be seeing. So what happened to price? So pushed up, big bullish movement, then price started ranging and trending downwards to build up sell side liquidity. So it kept on going. Then eventually it broke the retail support. And guys, this happens all the time. This is seller's wipeout. We're just going on um a higher time frame, but more pips, trying to capture more pips. Yeah, as you can see, price broke the retail support, came to the manipulation area or liquidity area, and that's where the bank's trapped in sellers, right? Then what happened after that? Boom, straight taken out of the highs, taking out the highs, taking out the highs, taking out the highs. Now, also, there's a strong resistance at 1375 in this scenario. So when price was, let's say you could, let's say you can't see, let's say you can't see what's going on the right, and you can't see what's going on the left side. The reason why you don't really want to swing in that situation is because like you don't want to go for like a big swing in that situation because price still hasn't built up enough liquidity to push up. Because a lot of the times UP USD it needs to go goes impulse, it will consolidate a bit, like it will range, maybe range it downwards or just range in like from zone to zone. Before then, the big move coming in. But of course, that doesn't mean you can't catch your 100 pip moves. When markets are ranging, whoops, the markets are ranging, that is a perfect time to come in and out, in and out. So for example, you can be buying here, capture your 100 pips. And then what you do, you can sell it as well at the top of the range. When markets are consolidating, you just want to take advantage. You're going to be able to take advantage of any kind of condition in the market. Let me show you another example. So that was one example. So let's see. What happened here is we've got the big impulsive move. And of course, after these big impulsive moves, guys, for price to swing back up again, it has to accumulate. Price has to accumulate, build up orders so that the bank can have volume to push prices up. So cool. Impulse followed by accumulation downwards so that the bank can have enough buying power to boom. These guys are very bad, can't lie. But you guys you know what I'm saying. So obviously after that, banks push up the price. These guys got taken out. And with this coming in here for a swing, perfect. You know, you'd have caught a nice 500 pips. Now, whereas swinging it too early, that's why you need to be like, if you're trying to swing, you need to make sure you have a short-term target. For example, you close, let's say you hit 100 pips, take some of your position off, you know, because it really sucks when, for example, you're in a position like this. Let's say you buy in here, hoping to capture price to this high. Then you end up seeing your trade go up by 230 pips and then just all the way down into your stop loss. That's not nice at all. Psychologically, that is not nice at all. Those kind of scenarios, very annoying. I've been through it. It's not nice. That's why, let's say, for example, you're trying to swing, make sure you have make sure, let's say you're not confident, let's say the accumulation hasn't happened, but you still think price could go up like 300 plus pips. Make sure you always have the first target, a smaller target in which you take off some profits, and then you let the rest run. Because even that, if price drops all the way down, you're still cool. Also, trading your stop losses is very important. But my overall advice is, if you're trying to get a swing, because we're all about catching the highest probability of moves. Before catching a swing, like when you're going for 300 plus pips, make sure price has followed those principles. You got the impulse, then you got the accumulation, before then price pushing on. Because that's all that happens in the market. We'll get the impulse, get a correction, accumulation, price goes down, and then it pushes back up. So that's why I closed at 140. I just want to make everything as detailed as possible so you guys can see the science behind it. Go for a last example. Last example. Okay. Simple. It happens all the time, guys. Like it happens all the time. I can keep going with this. But of course, can't be saying all day. But yeah, boom, impulse. Then price accumulates, it trends downwards. But when it's correcting, realize it takes much longer than the impulse. Reason why? That gives people more time to get in, more liquidity gets built up. The longer prices, the slower prices moving, the more liquidity getting built up. Because people will be trying to swing it up from here. People will trying to be swinging up from here. But so yeah, here, right here. What happened? The impulse, correction, accumulation of liquidity. Then we've got the false breakout. Now we're snipers over here. We're trying to catch that false breakout. So again, sellers wipeout. It always happens. So this would have been our retail support plus manipulation area underneath it, bit underneath it. And we'll have our sellers target down here. Sellers will be aiming for here. They also will be aiming for here, right? Well, of course, what happens? Price on the false breakout, boom. And then what happened after that? So you snap your entry there. There we go. That's another 400, 500 pip move. So you need to know when to turn on swing mode, when to turn on day trading mode, right? When you want to turn on swinging mode, you need to make sure you've got what do you call it? Impulse, the accumulation, the build up of liquidity, and then you catch the false breakout. So how do you know when how do you know when it's time to catch that big 300 plus pip move? Just showed you guys. But of course, you need to look at the zones as well. So obviously you can be trading, like for example here. I can be trading this consolidation. But how do you now know when price is ready? Well, that's when you combine your what do you call it? Your high time frames, your low time frames. Like how I did in my current trade that I'm in on GBP USD right now. I hope you guys understood those examples, but let me break down the current trade I'm in right now as well and why I'm in it. So I'm in this trade, this GBP USD trade, swing trade. It's a normal swing trade. I'm going for 400 pips. Oopsie daisy. Actually, let me go on the chart, which I already have everything marked up. All right, boom. So it's the current entry I'm in right now. Reason why I got in is because, and also one thing as well, the previous swing, what do you call it? On the weekly, it did look like what do you call it? It could have swung all the way up to 146 from there. But what do you call it? Because the resistance was so strong at 140, of course that forced price to push back down into the support area. Of course that got manipulated. But yeah. So let me break down the current entry I'm in. So boom, 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 boom. So start off with weekly. See what monthly is saying. Didn't really go too much on monthly. When I'm analyzing this, I don't think so. But cool. Let's start with monthly. So monthly, you can see that price came in. Price came in to this wick. This wick right here. Price came into that to test it. And guys, wicks always respect each other. It's like a seller's wipeout when the wicks wick line area happens on all time frames. So yeah, happens on the monthly, and when it happens on the high time frames, yeah, that's when it's very powerful. But boom, so got that confirmation. It's retested this week for December's monthly candle. So that's our monthly. Go on a weekly. On weekly it also makes sense because we can use this as like a support area as well. Plus there's a lot of wicks around this area, so that's our manipulation area. Also, if you look at the weekly, this support area, so this zone here, a lot of people will buy in from there. So there's a whole lot of liquidity ready for the banks to grab. So you already know banks want to grab that liquidity. So see how so price just fall down. A lot of liquidity getting taken. Going to daily now. And we see the false breakout. See the nice false breakout. But we also see price land into so cool. With the sellers wipeout, you can use it on daily time frame as well and higher time frames because it always happens in the market, no matter the time frame. But obviously, we're not looking at M1 and M5 really, but I'm just talking about like M15 upwards. But cool. On daily, you can see this is our retail support. So throughout this whole day, buyer's liquidity was getting taken out. Then this would be our manipulation area. Had backup entries, like backup entry areas like here. And if price was to do a crazy thing, then right here. Obviously, if price broke here, then I wouldn't really be too confident on price going bouncing back up. But yeah, so that's it on the daily. We'll have our sellers target. A lot of sellers will be targeting here price 1, 2, 1, 3. So, a lot of sellers will be targeting like 136